Bitcoin is sitting on the edge of a cliff, but the macro charts are still undoubtedly bullish. With only 24 hours until the weekly candle close, can Bitcoin close above the crucial $60,000 level? Let's go ahead and find out. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are doing a macro and short-term analysis. By the end of today's video, you'll have a detailed and well-rounded understanding of not only what is happening with the price action, what to expect next, but the key levels you need to be paying attention to. Alongside this, we'll be going over some very important charts, such as the Bitcoin dominance chart, the total cryptocurrency market cap chart, a few key technical levels on the higher time frame, and of course, like we said, the short-term charts in massive detail. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, you can join us on VIP, where we post trading setups with exact entry prices, exact stop losses, exact targets, trade justification, and exclusive analysis. If you are interested in more of this kind of content, you'll also get access to our group chats, our general chat, trading chart and education chat, trade setup, news help, and daily video chat. If you're interested in getting access to all of that, contact me in the pinned comment of the free channel. For more information, you can click these links. Let's go ahead, guys, and dive on in. So let's start on the market data. 24-hour volume is down 45%. Again, we are entering the weekend over here now in America, so with that, overall volume generally does reduce, sitting at a total of 71 billion. 24-hour liquidations down 68%, sitting at 50 million. Now, this is some of the smallest liquidations we have seen for a very, very long time, and overall volume has been decreasing significantly for the last couple weeks. Looking at the 24-hour liquidations, we can see only 24 million in long liquidations and 26 million in short liquidations. Taking a very brief look at the last 24 hours of price action, we can see Bitcoin really hasn't done all that much. We've seen sideways chop price action in a slight incline, resulting in a high of just shy of 61.5k and a low of around 60.4. At the moment, the price action is still gradually climbing in this short-term uptrend, and we'll discuss what this means and where Bitcoin is likely to go next in today's video. So as you can see by that liquidation data, really not too much decision, and this indecision is likely to continue moving into the upcoming economic news. And of course, the economic news we have in a few days is going to be the CPI data. And the CPI data this month is a data release of utmost significance, particularly as a result of the discussion or the tone that was set in the prior Federal Reserve meeting. There is a lot of uncertainty around future interest rate hikes and cuts potentially, and the CPI data as of right now is going to be massive in determining the probabilities of whether or not the Federal Reserve will be moving towards a cut sooner than expected, or even if another hike is back on the table. So a lot of people are in massive anticipation of the CPI data, and the market is unlikely to move in any significant direction moving into what will be quite a large impact event. Moving over to the DXY, we can see the DXY is still sitting very so slightly above that high time frame area of support. Again, while we do remain here, we do have the possibility to run back up to these high points. If the DXY breaks back above these high points, we are looking for continuations into this yearly level of resistance at 108. Of course, a retest of here would be very, very bullish for the dollar and bearish for traditional assets. If we do see a breakdown of this level of support and that 50 EMA, we could see a correction back down to 103, and of course that would be very bullish for risk assets and bearish for the dollar. Again, the DXY is heavily impacted on economic developments, including CPI, so we are watching to see how CPI comes out to determine the directional continuations for the DXY. Moving over to the S&P 500, we can see a very strong weekly candle close at 5246, so 5,246, sitting very high over here. Again, not quite breaking over that prior weekly candle, but getting very close to it, retesting. Again, for us to see strong continuations upwards, we definitely need to see a break over that prior high point, so see those continuations as potentially as high as 6,000. Again, while we do remain above that 5,000 low point, we are expecting those macro continuations upwards, and only if we lose a weekly candle of that 5,000 level would we then expect macro continuations toward the downside, retesting that 50 EMA and retesting that 2021 high point. The same goes to the Dow Jones. If only we break underneath that prior weekly low sitting at 37.7, would we expect macro continuations down to our 2021 high points. Until then, we are expecting macro continuations upwards, with the bullish trigger being the local high of the prior high at 40,300. Enough about all of that, guys. Let's go ahead and jump into Bitcoin. A quick word from today's video sponsor and we'll jump in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump into Bitcoin. So like we've said, we have so much to be discussing today, and Bitcoin is sitting literally like on the edge of a cliff over here. It is really in a delicate position at a high time frame area of support, where we can start to see this weakness that has been developing over now the last couple of days really spread to the higher time frames and to the short term. With that, we are starting to see some more bearish indications pop up on the weekly charts that we'll be discussing in today's video, such as a classic breakdown of the 62.09 on the RSI, which we've discussed many times on this channel in the past. If you're a long-time subscriber and viewer, you would know we've talked about this indicator all the way back in 2021 and a few times in 2023. So we're discussing the implications of a breakdown of this key trigger point on the RSI, as well as our technical levels on the weekly charts. We'll be going over the Bitcoin dominance chart, what is happening over here, how this could potentially lead to an altcoin season, the total cryptocurrency market cap, the weekly chart on Bitcoin, and of course, we'll be starting on the current price action for Bitcoin. So let's go ahead and jump into it. As we can see, Bitcoin is still very much ranging in this high time frame range. If we look at the last 2 to 3 weeks, we can see Bitcoin has been more or less chopping quite aggressively between the price range of around 64,000 to 58,000. If we do look at the last month or so, we can see we've been sitting underneath the $67,000 region, which is going to be acting as the midline of the high time frame horizontal consolidation range, as well as a bullish trigger point for a continuation to the range high. So straight away, if we do want to see continuations up to retest these deviations, these range highs, and break through into a macro continuation upwards, we need to break above our bullish trigger point, which is sitting at that $67,000 region, as represented by this red horizontal level. At the moment, the price action has been steadily moving toward the downside, creating again lower highs as we have been moving in this overall downtrend. Again, a sign of overall weakness and exhaustion. However, with this weakness and exhaustion, we can see we have recently created a nice higher low from our prior low above our high time frame range low of support of the macro high time frame consolidation. This is a good indication that buyers are still willing to step in at 60,000, and thus support should be considered support until it is not. And this is a key concept we'll be discussing in today's video. Moving over and talking about the higher time frame briefly, if we do want to see the price action to continue downwards on the macro, there is one key trigger point we need to lose, and that is going to be our prior low at 56 to 57,000. This is a key level we're discussing in today's video quite a fair amount. As we can see, this is going to be our prior low, and as we annotated over here, a continuation down below this will result in a continuation to retest that bull market uptrend. And our bull market uptrend is simply represented by this uptrending diagonal trend line. You can see that has spanned since October 2023. This is a 7-month-long uptrend and is a direct representation of the uptrend we have been within the current bull market. If we zoom out, we can see this horizontal resistance is going to be our bear market resistance. Below here is bear market accumulation. Above here, we officially entered that bull run, and we can see this uptrend originated from within the bear market accumulation out of that bear market officially into the bull market, establishing that bull run uptrend. So this is going to be the key trigger point where if we drop below this level, we actually enter a high time frame downtrend. We enter a macro downtrend if that level is lost. So until we lose that level, the macro charts remain bullish and the price direction is still upwards as we are sitting above this uptrending support level. So if we're looking at it from a purely trend-based perspective, the charts are still bullish. But if we're zooming down to a smaller time frame, we can start to see some bearish signs that we do need to be aware of and discuss. So let's go ahead and quickly jump over to the smaller time frame. As we can see on the daily candle, we have just finished closing our daily candle. If we zoom in over here, we can see we closed that daily candle green, and we actually closed it right at around $60,700-ish. So it's actually closed at around $60,791, which is sitting above that $60,000 region. More importantly, sitting above this high time frame area of support. So a relatively good close for Bitcoin provided the current circumstances. Let's go jump down to a smaller time frame. On the short term, we can see Bitcoin has been traveling upwards for the last couple days over here. Not all that much price action has really developed from this region. If we bring up our VRPV, we can see on the right hand side, according to our VRPV indicator, once it actually loads in, we can see we have a pretty large gap in volume moving up from this 61.5k region onwards. We can see from around about this region over here, the VRPV starts to thin out quite a fair amount. So we do have a bit of a gap in volume from this range. Again, we have this large amount of volatility over here in this candle toward the downside, representative again of an area of low historical trading resistance, and therefore we do have a clear and definable bullish trigger point sitting at this region between 61.2 to this 61.5k region, and thus a break above this level is going to trigger a large move towards this 63k region, once again retesting that prior area of resistance. So we're looking for continuations upwards over here. We are only expecting that continuation to really kick off if we break above 61.2 to 61.5. Until then, we are sitting above our uptrend, and our uptrend is going to be represented by this short-term uptrending diagonal trend line. We have now had 3 points of retest, or should I say 2 points of retest on this trend line. So we do have an established trend over here. If we do break down from this level, that is going to be the trigger for a continuation back down to that 60k region. And until we break down here, we are expecting a continuation to 61.5. So in the short term, expect a continuation to 61.5, but do not expect a strong continuation upwards unless 61.5k is broken. On the short term, if we do not manage to remain above this uptrending support level, we could see a correction as low as $60,000. Additionally, while we remain below 61.5, the probabilities not only are in favor of a continuation, but it is important to note that the downside continuation is not off the table. It is very much on the table. There is a pretty even split in terms of probability in regards to which way the price action could go, while the price action remains below 61 1.5. So let's go ahead now and zoom out one more time and discuss the higher time frame context. If we do look at the higher time frame price action over here, again, we do have a higher low developed on the price action. And thus, like we said already, provided our initial low is able to sustain, any correction that develops while the price action remains above this initial low should still result in continuations upwards. It is really a matter of what is going to happen on the short term and how choppy the price action is going to be moving into the CPI data. And as we know, like we said already, the CPI data is going to play a massive influence in overall perceived systematic risk as it increases or decreases the probabilities of potential rate hikes or rate cuts, and when those cuts or hikes will likely occur. And as we know, interest rate decisions directly influence the actual risk of the market and move investors' decisions, which influences the direction of the assets. So if we're looking at directional continuations, any move that occurs between now and CPI is likely to be a move of any significance. And again, the significant levels on the chart are going to be a loss of the 56 level, 56, 57 level, as this is going to be a bearish trigger, and a break of 67 as this is going to be a bullish trigger. Any move between this level is simply the price swinging between two key trigger levels. The probabilities in terms of directional continuations up or down do not change depending on where the price action is between these 2 points. The probabilities only change once the price action breaks above the key level of structural resistance or the key level of structural support. That is the short-term price action, guys. Let's move over to the total and weekly charts. As you can see on the weekly chart, Bitcoin is 23 hours remaining until this weekly candle close. Ideally, guys, we definitely want to be closing that weekly candle above that prior weekly high point. As we can see, that is sitting at exactly $60,000. So a loss of the $60,000 level on the weekly would be catastrophic for Bitcoin, as it could indicate, again, we are breaking under this level. We could potentially see deviation like we saw in 2021, and that could result in a downtrend continuing in the higher time frame, which, like we said already, could take us to retest that bull run uptrend at 52,000. Remember, that level over here would draw a vertical line down. We're sitting around 52,000, so a minimum of 52,000, and we could see the price actually retest a higher point depending on the date of which it retests this level if we do see directional continuations. So on the weekly chart, it is paramount that we are able to hold above 60,000, because if we don't, we could see that downtrend continue to take us between $52,000 to $56,000. So weekly chart at the moment, while it remains above over here, we have a traditional support resistance flip. Technically, this is a bullish retest until it breaks. So if it does break, it is going to become bearish, but while it retests and holds, this is going to be a bullish retest. Moving over to the total chart, we can see a very similar scenario over here, guys. The total is retesting a key level of significance at the same time. Bitcoin is on the weekly. Again, these markets, these charts, they kind of relate over here. We can see a weekly candle close underneath this level would be quite catastrophic, again, resulting in a macro downtrend starting for the total, and the total is a reflection of the entire cryptocurrency market cap as a whole. This will be quite damaging for the macro structure and the macro uptrend. Remember, the bull run would not be over, but it would definitely take a bit of a hiatus. We could definitely see some macro downtrend develop if this were to occur. While these levels hold a support, again, we are expecting continuations upwards. These are clear support resistance flips, while these areas of support are able to sustain. So do not sit here and say this is ridiculously bearish. It is not at the moment. It is still bullish. It is retesting as support. It is only good to be aware of the potential outcomes if we were to see these levels break. So you don't want to blind yourself to the possibility, because then you, again, reduce your ability to prepare and you reduce your ability to respond, which is important in a market. You need to be able to adapt. But you do want to be aware of what is happening so you can actually react and respond when it does happen. Moving over to the dominance chart, we can see, guys, the Bitcoin dominance chart. Bitcoin dominance chart has retested a key area of resistance on the macro chart, as represented by these two prior circles. Again, historically, what we have seen is during altcoin seasons, during the parabolic rally, we see Bitcoin dominance drop down to around 38 to 40%. At that point, we generally see Bitcoin top out and we see the market come to its peak. We are expecting a similar reaction this time around for the cryptocurrency market. So we are expecting a large-scale correction for Bitcoin dominance moving into the next coming months, provided the markets are able to remain quite bullish. If we do see Bitcoin dominance correct, we will see the altcoin season start, provided the total cryptocurrency market cap is able to increase. Remember, if the total increases, okay, and Bitcoin dominance falls, we'll see an altcoin season. If Bitcoin dominance falls and the total doesn't increase and the total decreases, what we'll see is we'll see both markets decrease. We'll see altcoins and Bitcoin decrease in value, but altcoins will decrease less than Bitcoin in terms of percentage. If we see the Bitcoin dominance break upwards, we actually could see again Bitcoin gain aggressively in comparison to altcoins, and depending what the total does, whether the total increases or decreases, will determine the overall trajectory of the entire market and the price of assets as a whole. Moving over to the weekly chart over here, guys, let's take a look at two indicators. Number one is the bullish indicator, number two is the potential bearish indicator. So what we can see over here is the pi cycle indicator, and historically we had 3 points of validation on the pi cycle. We have got the pi cycle low, which is the red line, breaking into the Ichimoku cloud. We can see the Ichimoku cloud represented by a green cloud. At the same time we break in, we see the price action retesting that prior all-time high, and at the same time that we see the price action sitting above the midlines of the pi cycle indicator. The midline of the pi cycle indicator is sitting at 57,000. 57,000 is going to be that local low point, so it all lines up. What we can see historically is, again, we've seen this 3 points of validation over here. We see it over here, price action above. We go back to the prior cycle. We see the same thing, 3 points of validation. We break in, retest the prior high, price action above the midlines. Go back to the prior cycle, exactly the same thing. We've seen it 4 out of 4 times. But what we haven't seen is, again, after the lower band breaks into the Ichimoku cloud, we do not see the price action close a weekly candle underneath the midlines of the pi cycle indicator until only after the top is in. Only after the top is in do we see the price action close with the midline, which results in a high time frame downtrend. So if we were to see the price action drop underneath the $57,000 region and close a weekly candle underneath that level, that could be a potential bearish indication that we are entering a high time frame downtrend. But until that happens, the charts are macro bullish. The charts are very bullish. In fact, what we are seeing in the prior 4 cycles are playing out exactly the same way this time. So provided 57,000 holds, we are expecting that macro continuation into the parabolic phase. There is another bearish indicator that I do want to briefly share, and this is going to be the 62.9. Well, I shouldn't say another bearish indicator. This is one of the main bearish indicators we are seeing over here, which is a potential breakdown of the 62.09 on the RSI. What we have seen historically is whenever we break below this level, or should I say above this level, we generally see a directional shift in Bitcoin, whether it be a short-term or a macro directional change. The percentage gains and losses are quite significant when these occur. If we take a look at this instance, we broke above over here, we saw a massive rally on Bitcoin. If we look at this instance, we broke below here, we saw a massive correction of Bitcoin. If we look at this instance, we broke above here, we saw that last final leg up for Bitcoin, we broke below here, we saw the macro continuation downwards until we finally broke up again over here, where we saw a strong move upwards. Again, we broke over here, we saw a strong move upwards. So what we're seeing again, guys, historically, we are now breaking underneath this level. We have 23 hours until the weekly candle closes to get confirmation if we do break below this level. But historically, when we break below that 62.09 point from the top side down, we do see quite a reaction, a bearish reaction in the price action. There has been one instance before where we did not see a bearish reaction, and that was back over here in August 2020, as by the time we actually had that close, we had already seen about a 20% correction in Bitcoin's price action. So this isn't made to scare you. This isn't made to think the bear market is coming. This is just a bit of data we have to look at. Will it play out again? There is absolutely no certainty. There's no certainty in anything, but historically when we do close under and above this level, we do generally see reactions that are quite strong in the market. So it's something to pay attention to at the minimum. Thank you for watching, guys. Have a fantastic day. Remember to zoom out. When you're in doubt, just zoom out. The macro charts are still bullish. The charts are developing into a parabolic phase. The 4-year cycle is still very much intact. In fact, we are very, very early. Interest rates are still very likely to come down, money is likely to flow in, the markets have no reason to go into a macro bear market here. Even if we do see high time frame down corrections, these corrections could take us to 52,000, and even then we are going to be macro bullish. It is only if we start breaking below that $52,000 level we start running the risk of entering high time frame downtrends. Thanks for watching, catch you guys on the next one, cheers.